Hi, everybody. Welcome. Welcome to Navigating Student Loans 2026. We are so excited to have all of you join us today. I am also very excited just to be in attendance of this webinar as someone who is currently in the process of repaying student loans myself. I'm sure I will also learn quite a bit from this. We've got a great speaker. We've got a great topic. It's going to be a really, really informative and exciting webinar. I cannot wait. Get all settled in, and we will get this started here in just a moment. While we have everyone trickle in, I want to go over just a little bit of webinar etiquette with everybody, some housekeeping stuff. We have two features for getting in contact with us. It's myself and then Michelle, who are going to be manning the chat and Q&A. We have the chat option there, which can be for comments, suggestions, general chat amongst yourselves. If you are using the chat feature, I would just suggest everybody hover where it says hosts and panelists and select everyone, so that way everyone can be a part of the conversation. And if you have specific questions, make sure you use the Q&A feature. There is going to be a lot of information on this webinar, so I would foresee a lot of questions coming up. We are going to have a little bit of designated time at the end, hopefully for some Q&A. But most questions, if we don't have time to answer on the actual webinar today, we will direct you to Angely's email as well as the website where you can ask all of your questions to her directly. So we want to make sure all your questions do get answered. Just not sure if we'll have the time to do it all on this webinar, but we will for sure point you in the direction and give you the resources that you need to get those questions answered. Everyone is also going to be receiving a recording of tonight's presentation by next week. We'll send that to your email. It'll have a YouTube link attached to it. So if you miss anything or you just want to go back and get the information some more, we will have that YouTube link sent your way. And at the end of this presentation, we are also going to have a quick survey that we're going to send your way. It'll be powered through Zoom on our end. If you wouldn't mind just taking a minute or two to fill it out, we definitely love to learn from all of your guys' suggestions. We want to make sure that everybody's voice is heard, your feedback is heard. So we would greatly, greatly appreciate you taking just a moment to fill that survey out. We also have another upcoming webinar next two Wednesdays from now. On February 25th, we have practical tips to accelerate your savings. It's going to be a practical, creative look at real world strategies that help you save without feeling deprived. We're going to explore different savings tactics, behavioral tweaks, and everyday habits to make the most of your money. If you're interested in that, you can register at patelco.org/webinars. And of course, any other questions, longer form suggestions, whatever, you can reach out to us, webinars@patelco.org. All right, tonight's webinar, Navigating Student Loans 2026, New Rules, Smarter Strategies. Like I said, I am super excited about being involved in this one as well. Can't wait to get all the information just for myself. We've got a great speaker this evening, Angely Miranda, the Senior Director of Youth Leadership and Financial Capability at MyPath. So MyPath is a part of the Student Loan Empowerment Network, which is a network of 14 organizations partnered with the California Department of Financial Protection and Innovation. And Angely is the lead for the Student Loan Empowerment Project at MyPath and has been working with student loan borrowers for over a year, providing case management and student loan counseling to many California residents. She has always worked in the nonprofit sector and has years of experience working with youth and young adults, providing a wide variety of services, including things like education, employment, coaching and mentoring, case management, foster care services. The list goes on and on. Her areas of expertise include crisis management and intervention, positive youth development, college advising, and individual/community coaching. Angie is also a former college advisor with years of experience assisting prospective college students with funding their college education. And on top of all of that, she's a certified financial social worker. So we have got ourselves an expert in-house tonight. I am very excited. Everyone get settled in, and we are going to go ahead and pass the mic over to Angely Miranda. Angie, welcome, and thank you for joining us this evening.
Awesome. Thank you so much for having me, everyone. I'm going to go ahead and share my screen before I begin. And here we go. Now, can everyone see my screen? Awesome. All right. Hello again. And thank you so much for that great introduction, Andrew. It's great to be here. I'm really excited to really share all the knowledge that I've gained through my expertise and my experience here. And today we are going to talk about navigating student loans in 2026, New Rules, Smarter Strategies Workshop. Do want to say just really quickly that we are part of the Student Loan Empowerment Network, and our mission is really to help California student loan borrowers navigate this complex student loan repayment system and build a prosperous future. Wanted to add that MyPath nor the network is not affiliated with Patelco Credit Union. And so for today, we are going to go through our agenda right now. So we'll be talking about understanding student loans and what you owe, informing yourself of payment options, important updates, and support available. We're going to be talking about how you can manage your money to help you pay for your student loans, as well as how do you advocate for yourself. And we will end with a Q&A. And so first, I want to go over understanding your loans and what you owe. Okay. So first, what we want to do is we want to get an understanding of your loans and just, and that's just as important as how much you owe. So we're going to keep it simple. One, understand the type of loan that you have. Are they federal loans? Are they private loans? And how much of each loan, including interest, how much of it do you owe? All right. And so what we want to do is when you gather your loan information, you want to know where you go. And so first you would go for your federal student loans. You will find these details on the loan servicer account and studentaid.gov. Okay, and I will show some slides on that as well. For your private loans, you're going to find loan details by contacting either the lender or the servicer of the loan, as well as checking your credit report. And to get your payment information, you want to know where to make your payments at. Usually, this is with the servicer, and you want to know exactly how much you're going to be paying and when that payment is due. And of course, we want to keep in mind that we do have interest. Okay. Next, so paying back what you borrowed. So a lot of the times, especially younger students, they always wonder, how much am I going to have to pay back? One, you need to know and understand how a loan works. So the total loan amount that you borrowed plus interest is what you're going to pay back, right? You want to review your federal loan history for the breakdown of what's owed. And this, again, you can find on your federal student aid account. This is also the same information where you sign in to get your FAFSA. You want to also know who your loan servicer is, who it is and how they can actually support you. Know that you do have rights here in the state of California, and services are here to help support you. You can create an online account to your servicer's website and make your on-time payments to your servicer, as well as save on interest by enrolling in an automatic debit when making your monthly payments. Okay. All right, so where do you find this information? For your federal loans, like I said earlier, you would go into your FSA account. Here, this is the same account that you filled out your FAFSA. So here you'll find all the information that you need for your loans, how much you owe, including the interest. It'll tell you who your servicer is. It'll tell you when the next payment is due. And you'll have a history of all the payments that you've made in your FSA account. Your FSA account will also help you to find out and look for any income-driven repayment plans, which we'll get into in a little bit. But your FSA account is where you need to go for all things federal student loans. Now, when it comes to your private loans, you would go into your servicer account. And here you will be set up with your servicer account through the promissory note that you make. And we'll get into that one. But I just really want to say that these are the two places where you will find your information on how much you owe and where you make those payments to. You can also look in your credit report to find out where your private student loans are. Okay, you can also get information there. All right, so with the private loans, digging a little deeper here is you want to check the loan agreement that you signed when you took out that student loans. So it's really important for you to keep any form that you've signed and even an application, just keep copies of that with you so that you know exactly how much what you signed up for. You can also contact the lender or the servicer of the loan. Here, a lot of the times you can log into your online account through your servicer to view your student loan information. And again, you can get that through your checking your credit report. Again, we want to save all communications and notifications sent to you by your lender and from your servicer. All right, so now your payment options and student loan support. So over here, we're going to go over some repayment plans. So you want to go ahead and explore affordable repayment plans. And here you can go into the FSA account or the Federal Student Aid website. You can pick from repayment plans that are based on your monthly payment, on your income, or on your income, and any of the plans that give you a fixed monthly payment. So the lower your income, in theory, the lower your income or the larger your family size, the less you'll pay per month. So a little bit of the 411 over here is that you don't get to, if you don't pick a plan for yourself, right? The loan servicer will place you on the standard repayment plan. And this repayment plan is a 10-year fixed repayment plan. This also may result in a higher monthly payment for you if you do not look over the affordable repayment plans that are available. Okay, so it's always good for you to do some research, see what works for you. And again, the default will be the standard repayment plan, which is not always affordable. Here is a video of that I want to share with you of the student loan repayment plans that are available.
After college, career school, or trade school, you might find yourself with student loans. While repaying your loans can seem intimidating, we have many tools and resources available to help you through the process, including a variety of repayment plans designed to meet your goals and needs. Federal Student Aid offers repayment plans that fit into two groups: fixed payment repayment plans and income-driven repayment plans. On a fixed repayment plan, your total principal balance is broken up into regular monthly payments that are designed to see your loans paid off within a fixed number of years. On an income-driven repayment plan, your income and family size determine your monthly payment amounts. Income-driven repayment plans typically lead to loan forgiveness after a set number of years in repayment. We have three fixed repayment plans: the standard repayment plan, the graduated repayment plan, and the extended repayment plan. On the standard repayment plan, your monthly payment amount will lead to your loans being paid off within 10 years. However, if you have a direct consolidation loan, you'll have up to 30 years to pay off your loan. If you don't select a repayment plan, you will automatically be placed on the standard repayment plan. With the graduated repayment plan, you will start with a lower monthly payment than on the standard repayment plan. Every 2 years, your monthly payment amount will increase so that you'll still pay off your loans within 10 years. And if you have a direct consolidation loan, you'll have up to 30 years to pay off your loan. On the extended repayment plan, you'll make payments over a longer period of time, which can be helpful if you have more than $30,000 in direct loans and want a lower monthly payment than the standard repayment plan offers. You'll have either a fixed payment amount or a graduated payment amount that will lead to your loans being paid off within 25 years. Keep in mind that while you might have a higher monthly payment amount on the standard repayment plan, you will pay less over time compared to the other two fixed repayment plans because your payments will cover more of the accrued interest and principal balance. We also offer 4 income-driven repayment plans: the Saving on a Valuable Education, or SAVE plan, the Pay as You Earn, or Payee plan, the Income-Based Repayment Plan, known as the IBR plan, and the Income Contingent Repayment Plan, or ICR plan. On an income-driven repayment plan, your monthly payment amount is based on your income and family size. If your income or family size goes up or down, then your payment amount will change as well. Each of the income-driven repayment plans has its own benefits and eligibility requirements. Your loan type will also affect whether you're able to enroll in a specific plan. Visit studentaid.gov/IDR to learn more. Although income-driven repayment plans aren't designed to have your loans paid off within a specific period of time, your remaining balance is forgiven after 20 or 25 years, and sometimes even sooner. Loan Simulator can help you figure out which repayment plan makes the most sense for you and your loans. You can use Loan Simulator to estimate your monthly payment amount, your repayment period, and your total amount paid over time. This tool can also help you compare different repayment plans. Loan Simulator can even help you determine whether you should consolidate your loans. To use Loan Simulator, visit studentaid.gov/loan-simulator. And to explore all of our available repayment plans, visit studentaid.gov/plans. Once you have a good idea of which repayment plan or plans you're interested in, you can switch plans by contacting your federal loan servicer. We work closely with loan servicers to handle payments. You can log into studentaid.gov to find contact information for your loan servicer. Or if you're interested in an income-driven repayment plan, you can apply online at studentaid.gov/IDR. Once you're on a repayment plan that fits your financial goals, you'll receive an updated billing statement from your loan servicer with your new monthly payment amount. You'll make your payments through your loan servicer. Your servicer will provide instructions for how to make a payment, so if you have any questions, make sure to follow up with them. To stay on track with payments, you have the option to set up autopay. Your payment will automatically be taken out of your bank account each month, and you'll get a 0.25% interest rate deduction on direct loans. After following these steps, you'll be set up to successfully pay off your student loans. And remember, you can change your repayment plan at any time for free. If you have any questions, reach out to your loan servicer or visit studentaid.gov/help-center. And for more information about student loan repayment, visit studentaid.gov/repay101.
All right. So I hope that was very informative for you. But I also wanted to give you all just kind of like the where we are right now in terms of updates on the student loan repayment plans. So, as many of you might have heard, that in July of 2025, the president signed the Big Beautiful Bill, which made a lot of changes to all things student loans. And so, here are a couple things that I want to update you all. So, one, there's going to be an end to the following income-driven repayment plans by July 1st of 2028. And so, this is important for you to know because right now these are still available, but starting July 1st, 2028, these will not be available for for current student loan borrowers. So those of you who have recently graduated, right? So the income contingency repayment plan, the pay as you earn plan, and the saving on a valuable education plan are not going to be available. They are actually going to be sunsetting those uh, soon, I want to say, but they're definitely not going to be available anymore after 2028. So borrowers whose loans are all dispersed before July of 2026 will have the following repayment options. So the standard repayment plan, there's going to be a new repayment assistant plan, also known as RAP, and then the income-based repayment, IBR, and the graduated and extended plans. Those will be available. And this, unfortunately, this bill also ends the Graduate Plus loan program and creates new limits on how much students and parents can borrow in federal loans. So the Graduate Plus loan program was really for graduate students, those who want to go back to school. Um, those are going to be gone, unfortunately. And of course, in terms of like the Parent Plus loans, those are the ones that parents take out on behalf of their students to help the students pay for college. There'll be new limits to that. Um, so the big bill really did change a lot of opportunities for people. The next one is this is repayment changes for borrowers with any new loans after July 1st of 2026. So borrowers will only be able to choose between two repayment plans. Okay, so again, these are for new borrowers, those who are going to college this year and are getting financial aid and student loans as a part of that. So the repayment assistance plan and the new standard repayment plan will be options that they have. If a borrower consolidates a loan after July 1st of 2026, they will only be able to repay via again, the RAP plan or the new standard plan. And then borrowers with any new loans as of July 1st, 2027 will not have access to economic hardship or unemployment deferments and will only be able to be in a forbearance for no more than 9 months in a 24-month period. So what this means is that if you happen to lose your job or if you have a financial hardship, that they'll only be able to put you in a forbearance for about 9 months and that's it. Then you'll have to go back and start repayment. So all of these are very important updates, and it's super important for us to stay on top of these updates so that we know how it's going to affect us. Um, so we definitely want you to continue to pay attention to what's going on out there. So how do you stay up to date? So again, you can stay up to date by going on to the Federal Student Aid um, website. There's also the Department of Education website that you can also go into. Those are the two main places where you can find these updates to any of these changes. It's important for you to keep up with any policy changes that affect student loans, right? So federal student loan policies change due to new litigation or new administrations, right? This wasn't a thing before, and now it is with the new administration. So we're all living through it, right? You can also understand what you want to do is you want to understand how these changes can actually impact repayment plans, also eligibility for forgiveness programs that are out there, and for loan terms as well. Helping you stay on top of the latest also will help you to avoid penalties and navigate and any negative consequences that come with that. So, for example, missing payments due to confusion about any updates can lead to late fees, increased interest rates, and even damage to your credit score. Delinquency is huge, right? Delinquency can lead to default, which has severe consequences like wage garnishment and loss of eligibility for future federal aid. And also these updates can also, you could take advantage of anything that's available in terms of benefits, right? So there may be new programs or new repayment options that will help student loan borrowers in the end with more affordable payments. So again, I say all this so that you can just stay up to date and letting you know that it's going to be very important to stay up to date these days with all the things that are always changing on us, right? So yeah, so just make sure you pay attention. All right. So learning about student loan forgiveness options. So there are several loan forgiveness options that are out there. But again, these programs have strict eligibility requirements. And so one of the ones that are very popular is the public service loan forgiveness. Now, this is for people who work for eligible government and nonprofit employers. You'll pay a specific amount per month for 10 years. And after that 10-year period, of course, you have to meet requirements, right? Um, After 10 years of being on an income-driven repayment plan, you'll be able to get the rest of your loans forgiven. There's also the teacher loan forgiveness, which works like the public service loan forgiveness program, but this is very specific for people who work in teaching jobs. And now these teaching jobs have to be meet the eligibility, right? So it's not just for every school, every teacher that works at every school. It's very specific. And again, you learned about the income-driven repayment plans. Some of those actually lead to forgiveness, right? When you repay your loans through this income-driven repayment plan, there is a chance for you to actually get the rest forgiven. And then there's the total and permanent disability discharge for people with a disability that severely limits their ability to work, which also limits their ability to pay, right? Because if you don't have a job, you don't have income, then you can't pay. So again, there's a lot more information that you can find. I just wanted to mention these to you. If you go to the Federal Student Aid website, look for forgiveness cancellation, you'll be able to find these programs there. All right. The last thing I wanted to say was you want to take advantage of any support that's available. So here, this is a part of the network that MyPath is a part of. Here we provide one-on-one support with your student loans. We review your loan information. We assess your financial goals. We explore eligibility for forgiveness or cancellation programs, and also discuss various repayment plans and options, including consolidation and default management. This is what we offer on a one-on-one. So go ahead if you are interested in meeting with a counselor one-on-one. Go ahead and fill out the referral form on this link. This link will also lead you to the Student Loan Empowerment Network website. There are a lot of resources there, and you can also sign up for one-on-one through that website too. Okay. All right, so managing your money, which is a huge, huge part of this. We don't really talk about money management as much as we should. Some of us have a wealth of knowledge about finances, while others are pretty much figuring it out as we go and on our own. So I'd like to share some tips with you on how you can manage your money so that you can keep up, this lifestyle that you want while paying off your loans, right? So we're going to start with a couple of tips for managing your money. Um, so one, you want to create a budget. Creating a budget is a great way to see where your money is going, and where it's coming from, right? So ideally, it should fit your lifestyle and spending habits, but you want to be realistic as well. So creating a budget, tracking your spending, knowing exactly where your money is going can really help you to manage this debt that you will accrue, right? Especially with student loans. You also want to cut back on recurring charges. You want to be able to pay your bills on time. There's one rule that we have here at MyPath. We say pay your bills in full and on time every month, and that really does help you stay out of debt, right? So when it comes to tracking your spending, again, you want to know how much you're spending on essentials like rent, food, bills, versus how much you're spending on what you want, right? This needs versus wants things, right? So how much are you spending on being out there, fun activities, shopping, getting your nails done, getting your hair done, knowing exactly where it's going, right? Knowing the difference between a need and a want is really essential for survival, really, right? Because if we have a small amount of income coming in, we want to make sure that we have enough of that going to our housing and our food. Um, Meanwhile, I know that sometimes it's good for us to kind of go out, every now and then, but really knowing the difference between a need and a want and making those small little sacrifices, right? Maybe I don't get my nails done. Maybe I don't go to the movies this month and have that money go towards my debt and go towards my student loans is also super helpful. Um, so I know that living on less than you make, a lot of the times you want to make sure that your expenses are less than your income. If they're not, then you're going to need to either reduce your expenses or increase your income to balance off your budget. And so sometimes it might mean I might have to get a second job so that I can increase my income. Even maybe a side hustle. Maybe you like to bake some cupcakes and sell them, right? That's a good way to make money. I know our young people are very creative when it comes to having a side hustle there. They'll do hair, they'll do nails, and that would help them to make that extra income. Some other tips, never pay money up front for help managing your student loan debt. I say this because this information is free. It's available to you. You can go to various websites like the federalstudentaid.gov. You can go to the Student Loan Empowerment Network website to get all this information for free. If someone is charging you or asking you to pay up front for this information, no, it should not be happening, right? If possible, you can also get ahead of your balance. Like I said earlier, maybe it's sacrificing going out to movies or whatnot. You can use that extra money to pay off your student loans, right? To pay off go towards that balance. And also important, it's to monitor your credit, making sure that, you're paying things on time and that your debt is not accruing, right? That you're pretty much monitoring it, making sure that you're making all your payments there. So that's a great way for you to help you stay on top of it. When it comes to making a payment and you're not sure what to do, but you got your first bill, you want to find your monthly amount by logging into your loan servicer's website. Okay. Then you make your payments to your loan servicer. One way that you can help kind of decrease the anxiety and all that is maybe sign up for auto pay if you do have the means to do this, right? The servicer automatically will deduct your monthly payment from your bank account. You don't even have to worry about it, just as long as you know that you have the money there. And you can enroll into auto pay. It's also known as auto debit when you do it, so that you don't miss payments. This is a good way for, set it, forget it. and know that it's getting paid. One cool thing about using this option is that you can also earn a discount through your servicer, and they'll be lowering your interest rate, right? Which is I think, a great way, a great perk if you do it that way. If you do end up missing a payment, know that missing a payment leads to delinquency and potential default, right? So what you want to do is you want to contact and discuss repayment options with your servicers so that you can avoid defaulting on your loans. All right. One of the things that I do want to say, that if you are having any difficulty making your payments on your student loans, don't wait to contact your student loan at the end. I say just call them and let them know what's happening, whether you lost your job or there's been a decrease in your income, and you know it's going to be hard to pay your student loan on this in this month. You want to call them up. You have to be proactive. Their job is to work with you. Their job is to support you. So they will work with you and they will support you, right? So letting them know that they might be able to put you on a forbearance for about a month, and maybe it's, can this month, can I pay a lower amount and then go back to it next month? They are open and willing to work with you, and if they're not, you should file a complaint against them because they should be working with you. Okay. The next thing is applying for an income-driven repayment plan to lower your payment, right? Maybe at first you were able to pay off your loans with the standard repayment plan that they have you on, and then all of a sudden you're like, oops, actually it's getting a little tougher for me. So let me look into these income-driven repayment plans, right? If your income drops, right? Or if you become unemployed, your payment could be as low as 0 per month because there's no way for you to be able to pay that, right? When you're on an income driven repayment plan. So we definitely want you to explore that and see what you're eligible for. And then again, you could always request a temporary pause of payment. A deferment would be if you decide to go back to school, they'll put you on a deferment, meaning that your loan payments will be paused. And then there's a forbearance. And with the forbearance, that's with, like, if you're having a hardship or if your income drops, you lose your job, you will be requesting a forbearance. Okay. So if you can't afford your payments, you want to request a forbearance. This process that allows a borrower to pause their federal student loan payments. The interest will continue to accrue during this time period, and it may be capitalized, and meaning that it'll be added to the total amount at the end of what you owe. And also know that there are different types of forbearances. So there's a processing forbearance, and this processing forbearance is something that you'll be put on when you're applying for an income-driven repayment plan. While they are processing your application, you will be put on a processing forbearance. You won't be required to make a payment. The general forbearance is pretty much you asking them for a pause, not because you're applying for a program or for an income-driven repayment plan, but more because you don't have the money right then and there, and you would just like them to pause it for just a month. Okay. And again, the deferment is a process that allows a borrower to pause their federal student loan payments. Interest does not accrue during this time on subsidized loans, right? And again, this is if you do decide to go back to school, they will put you on a deferment. All right, so avoiding the two Ds, and here we're talking about delinquency and default. So delinquency is pretty much the first day that you miss a student loan payment. That's what it becomes past due, therefore you're delinquent. Your loan account remains delinquent until you actually repay the past due amount or make other arrangements with your servicer, again, asking for a deferment or a forbearance, or maybe you want to change your repayment plan and you want to apply for an income-driven repayment plan. Once you're delinquent, you will go into default. So again, this is a very continuous delinquent. So the loan will go into default. The point when a loan is considered to be in default really does depend on the type of loan that you receive. So specifically with federal student loans, like a federal direct loan or a FFEL loan, you would be considered in default if you miss 270 days. Like if you haven't made any payment in 270 days. So I think that's a fair amount for you to be able to catch up, right? So again, You want to prevent going into default because it does have consequences. So, in terms of consequences for delinquency, it could damage your credit score if it's not taken care of right away. They do follow that rule of, I forget what the amount of days are where you get dinged, right? Maybe I forget the amount of days, maybe 30 days. They'll report it as, or 90 days, something like that. It'll be reported, right, to the agencies, and then it'll be show up on your credit score. There's also loss of eligibility for certain federal benefits, and also increased interest if you don't pay up, right? So all of these things can happen to you if you are delinquent. Again, as soon as you pay it back, you'll be on good standing terms. Now, delinquencies, like I said, will lead into default. The consequences for going into default is wage garnishment and tax refund offset. I do want to say that in the beginning of the year, the federal government was saying that they were going to go after any student loan borrower who was in default. They were going to start garnishing wages and taking back the tax refunds. That's no longer happening at the moment. I think it was maybe 2 weeks ago where they said, okay, we're not going to do this. So I think uh, student loan borrowers can actually breathe again. But who knows, with this administration, they might reenact this. They might tell us again that we're going to actually go after garnishment. So for now, we're okay. But again, when you're in default, this is a practice that they'll have. Um, Also, loss of eligibility for other federal aid if you do want to go back to school. You can also face legal action, and this is when the lender, right, can take you to court, and say they're going to sue you. They'll also have you be responsible for the any court costs, collection fees, attorney's fees, and other costs associated with the collection process. There will also be damage to your credit score, and also you won't be able to renew a professional license or may be prohibited from enlisting in the armed forces if you continue to be in default and you don't resolve that issue. Okay. All right, so advocating for yourself. This is definitely a huge, huge part of what you're going to be doing. So one thing that's super, super important, right? If you don't, I think right now is a good time for y'all to start practicing advocating for yourself. So what exactly does that mean? So it's really to ask for help or support. More specifically, it's the ability to identify your needs and your desires and letting them know, hey, I need you to support me with this. How can you support me with this? Right. And this, again, could be at a life level. We are saying advocating for yourself in terms of when you talk to your servicer and your loans, right? But again, I think this is a good life lesson here. So, why is it important for you to advocate for yourself? One, it empowers you to take control over your life, right? You want to achieve some goals, ensure that your needs are met, and also clearly communicate your thoughts and desires. I think it's an important life skill. It increases self-awareness, confidence, and better outcomes in both your personal and professional life. It also helps you to create independence, find solutions to problems, and build your own resilience. It's a form of self-care that supports your well-being as well. Okay. Advocating for yourself is huge when it comes to your student loans, right? And so, again, when you're speaking to a servicer, I know that the first time you might be intimidated, you might feel a little anxious, but before you speak to them, you want to prepare yourself. Know what your issue is. Know what it is that you're trying to get from them, what support you need from them, right? Gather all your documentation, all the information that you need. And then also practice what you'll say. Sometimes practice makes perfect. Sometimes talking in front of a mirror, or maybe practicing with a friend or a spouse, or anyone to see what you'll say, right? This, again, this is for you to be, if it's the first time that you're going to be advocating for yourself, it's good to practice this, right? When speaking to your servicer, you want to introduce yourself clearly. They're probably gonna ask for some kind of identifying information, your name, birthday, social security. So be prepared with that as well. You want to explain your issue thoroughly. You also want to be very assertive, right? When they respond to you and you don't understand what they're saying, you want to ask clarifying question, right? You would definitely want to pay attention to what they're saying. You want to track notes, right? Keep notes of what they're telling you. And then also, if there's a solution that you're not happy with that they give you, I would say go ahead and propose what solutions would work for you. Being proactive, would help. And then things to remember when you speak to them, don't be scared to ask someone that you have never met before for help. Every time you pick up the phone to talk to a servicer, you're going to be talking to someone new. It's never the same person. Unless you ask them for their name and their direct number, then that's something different. But for the most part, in general, when you're calling the servicer, you don't know who you're going to get. So don't be afraid. Staying calm and professional is always good. Know your rights because again, these servicers are here to help support you, and to really help you navigate the repayments and help meet you where you're at, right? And support you. And then also follow up if needed. It's always good to let them know, okay, how can I follow up with you? Can I get your number? Can I get an email? And let me know what next steps are, right? And to make sure that you get what you need. All right. Self-advocacy, like I said, escalate if necessary. I know that I asked you guys to stay calm and professional, and sometimes the person on the other phone is not. And if they are not, and if your concerns aren't being met or addressed, then I would say go ahead and escalate. All right. You can speak to their superior, and they should be able to transfer you there. And hopefully the supervisor will actually be more helpful. Again, document the conversation. Keep notes, key details, including date, time, and the servicer's name. This will be very important moving forward, because it is, a lot of the times they give you information, you'll need to follow up with them, and they'll give you a specific program to apply for. And let's say you talk to them again and you're like, oh, that wasn't the application for the forgiveness program that we were talking about. Again, it's keeping them in check, ensuring that the information they're giving you is legit. And so if anything goes wrong, know that you can always file a complaint when needed. I think it's always important for us to file complaints for them. It underscores the seriousness of the issue that you're having, and you want to get action. You want those issues to be resolved. It holds the servicers, the lenders, and other folks accountable, right? So this is why it's important for us to file a complaint. It ensures that concerns are being heard, and it also protects other borrowers, right? So we at the network, with the Student Loan Empowerment Network, take these very serious. Um, Part of the network, we work with legal aids, so that means that we have attorneys who will refer you to, and the attorneys will support you with filing a complaint and escalating that to a higher level if needed, because they truly do believe in holding servicers accountable, not just servicers, but also lenders. Um, because sometimes there are some things that lenders and servicers do that are very predatory that go against supporting you. So we want to be able to hold them accountable. So yeah, so we definitely want to make sure that y'all know who to contact when it comes to that. Okay. All right. So to sum things up, we want to make sure that you have an understanding of your student loan situation, what you owe, how much you owe, and all of that will really help you be ready or get ready for your loan repayments. Knowing about repayment options and forgiveness programs can also help you get an affordable monthly payment if you're eligible. Staying up to date with the latest news on all things student loans will also help you to stay on top of your payments, as well as the status of any income-driven repayment plan or forgiveness program. Managing your money, again, is going to be a super important and a good way for you to prevent from defaulting on your loans and making sure that you stay on top of your payments. So remember, you do want to avoid the two Ds. It's also important to advocate for yourself and communicate with your servicer when making payments becomes a challenge for you. So speak up, ask for help, and ask for that support. And know that the Student Loan Empowerment Network is here to help you. So don't hesitate to ask for help from us. Okay. All right. So are there any questions? I'd like to open it up.
Hi, so we had two that popped up. Felita asked, are there any resources for people who are retired or on a fixed income that you know of?
I would say that's a very specific situation. I would say
Mhm.
definitely connect with the Student Loan Empowerment Network. They have, again, they have attorneys that you can connect with, and there may be some programs, I think, depending on the type of loans that you have, because a lot of the information and resources are more for federal loans than for private loans. So those are going to be two different things, right? So I would say, depending on your situation, definitely connect with the Student Loan Empowerment Network and connect with, get that one-on-one support.
For sure. And then I gave her that in the chat. I'm going to earn the Q&A. I'm going to drop that link in the chat as well in case anybody else wants it. I just put the Student Loan Empowerment Network link in the chat. So if anybody wants to send a referral, that is where you can find it. And then we had Trina ask, when you go back to school, do you have a minimum amount of units that you have to currently be taking in order to be or stay on deferment? Is that,
So
go ahead.
Oh no, I was gonna say, so no. Once you're in school, those the current student loan payments that you'll be making will be deferred, so you don't have to worry about any of that.
Okay.
And it doesn't matter whether you're going full time or part time.
Okay, beautiful. And then one last question that just popped up. Do you have any suggestions, recommendations, or anything on student loan consolidation?
You want to be very careful with
Okay.
consolidating. I know that a lot of the times consolidation sounds like it's going to be super helpful. Um, but the problem with consolidating now, I would suggest you speak to a financial advisor. But the problem that we have right now is that if you consolidate your loans, your federal student loans, there might be a chance that it will make you uneligible for the income-driven repayment plans as well as the some of the forgiveness programs. So we want to be very, very, very careful when we consolidate. Again, it's going to depend on the type of loans that you have, that when they were given to you. um, yeah, it's very situational. So I would say if you are interested in consolidating, speak to a financial advisor, but also get help from the Student Loan Empowerment Network because consolidating can lead to you missing out and benefiting from these programs.
Okay, great. So yeah, the same link for who asked that question that I just dropped in the chat, the studentloanhelp.dfpi.ca.gov. That is where you can go to have all those additional questions answered if you want a little bit more guidance on consolidation, student loan repayment, anything like that. It's a great organization that can get you helped out with all those questions that you have. Those were the main questions that we had tonight. Angie, thank you so much for joining with us. I
Yay.
learned a lot as well being here, so I was very, very grateful for your time. Yeah,
Yay.
we really appreciate you stopping by and imparting your wisdom. Very, very helpful. Thank you.
Awesome. Thank you so much. And I also do just want to say that there is the survey that we have for y'all if you can take it. And then lastly, I do want to uh, provide my contact information. If you have any like specific questions for me, you can go ahead and email me at agilely@mypathus.org. And we also have our landing page over here as well.
Beautiful. I
All
will
right.
also drop your email in the chat. Angie, would you mind going back one more time just to show that QR code again
Yeah.
for the survey? mypathus.org. All right, so that is Angie's survey. That'll direct you straight to the MyPath survey that she is offering. I have went ahead and thrown her email address in the chat. So if you have any other direct questions, feel free to reach out to her that way. We still do have the student empowerment link in the chat as well. So make sure you save both of those. We will also have Patelco's survey popping up here as soon as we end this webinar. So it would greatly, greatly appreciate if you guys would take a minute to fill that one out as well. It's just 5 questions, helps us out quite a bit. But otherwise, thank you so much, Angie. We appreciate your time.
Thank
Thank you, all of you
you.
guys, for joining us, and hope you enjoy the rest of your evening.
Thank you. Have a good night, everyone.
Bye.